In today's video, we're going to look at what's crashing the crypto market. A lot of people have a lot of different thoughts on what's causing the problem. If you're doing your CTKS cheat sheet, you already know the answers why. In this video, we'll look into those reasons. And if you're new to the CTKS Global family, you'll be really surprised what those reasons actually are. Let's run the numbers. Hi everyone, I'm Ken from Crypto Trading KS. If you're new, a very warm welcome and welcome back CTKS family. When we look at the main markets, we can see the S&P 500 is going to all-time new highs. We also see that Bitcoin has been doing really quite well, but it started to weaken recently. Since the halving, we've seen negative price volatility inside crypto and Bitcoin, but it's recovered of late. It's just showing a little bit of a sign of weakness at the current time, but the overall trend is mega up. If you're liking the content, please smash that like button and don't forget to subscribe and turn on the bell notification icon so you don't miss a thing. And thank you for being here. Kate and I are really grateful and appreciative to be sharing this time together. Now let's get back to it. Ranked by assets or asset amount, the market cap of gold is 15.77 trillion. We can see silver 1.667 trillion and Bitcoin coming in and at number 9 at $1.304 trillion. The stock market in the past trading session had just a little bit of a down day, coming in at 0.04 -%. Industrials did the worst, followed by materials and energy. Communication services and IT did the best. There's a tremendous amount of fear inside the stock market. We saw the reading in yesterday's session or the previous close at 38. That's pretty fearful. And that was actually down from the previous close, which was 43, which was also fear. 1 week ago, we were sitting at 45. So you can see the fear is entering the market. People are getting freaked out. Looking at a heat map of the main markets, Nvidia did quite well, and the semiconductor industry not too bad. Tesla was down 2.44%. We've seen energy and industrials come down. People inside the crypto market are feeling a certain amount of greed. They're feeling quite optimistic, but that has actually been decreasing. The fear is entering the market. What is causing the fear inside the markets right at the current time? It's the DXY. The DXY has been going nuts recently. It's been coming up and down. When the better than expected CPI came out, the DXY actually tanked and then it came up, and that's caused a lot of problems. You can see that gold has been decreasing. Yields have also been decreasing. So the major problem inside the market that's causing people consternation or concern is actually the ascent of the DXY. We can see that gold and Bitcoin have been quite hit. Gold is this particular chart, and you can see that it's been coming down. And the blue line across all of these charts is Bitcoin. We can notice a bit of a divergence between Bitcoin's price action and the Nasdaq's price action. Bitcoin and gold are very yield and very DXY dependent. Turning to US liquidity, we're starting to see a bit of liquidity come back into the market, which is a good thing. Despite the DXY's absolute strength, we're looking at the S&P 500 here over the past week or so, and we can see that the S&P 500 got through levels of structural resistance and converted those into support, and then rallied up to the next structural resistance level and has backed off from that. Over the past 30 days, the S&P 500 is up 9.64%. To answer the question, what is tanking crypto, look no further than this little culprit, the Dixie or the DXY. The Dixie is really naughty at the current time. But Ken, how is this pulling down crypto? Perhaps this is a little easier to see. If I invert the scale, you can see that the DXY generally throws inverse pressure onto Bitcoin. And if Bitcoin is coming down, hey, guess what? All of crypto is coming down. In the last 24 hours, we've seen Bitcoin come down 1.38%. Solana has been hit more, down 3.41%, and XRP down a little over 1%. Ethereum is showing a lot of strength. ETH could be one to watch coming up because Gary Gensler has said in the next couple of months the ETH spot ETFs will start trading. The greatest gainers across the past 24 hours in the crypto space: Notcoin, Toncoin, AKT, LDO, Uni, ENA, and Core. The greatest losers past 24 hours: Injective, Ronin, Stacks, Wormhole, FET, Beam, and Near. There's been a lot of liquidations in the past 24 hours. In fact, nearly $225 million worth, with longs in excess of $181 million, shorts around $43 million, and liquidations over 80,000. With the spot Bitcoin ETFs, we're starting to see outflows. We got a bit of a bump up in the past trading session, but now we're into the red territory. Price movements are not random, and Bitcoin controls the entire crypto market. One thing that we do inside our community, we understand where the structural resistance and structural support levels are. We can see back here on the 7th, Bitcoin made a run for the 71,791 structural resistance level. But you can see there were so many structural resistance levels up here. It just couldn't hold on. If it's not going above, it's going to the levels below. And if you have a lot of overhead structural resistance, it may push it down to stronger structural support way below the current price. Unfortunately, around the 8th, this is exactly what we saw happen. We couldn't just confirm this structural support as structural support. Instead, it remained as structural resistance, and it made its way down to this $67,000 level. When the CPI came out and the FOMC, we had an initial surge up, but we didn't make it to this structural resistance level at $70,053. When you have a positive fresh air gap, price can move up very, very quickly, but that can also turn into a negative fresh air gap where price can collapse down very quickly as well. In the past 24 hours, we've been trying to confirm this 67,006 as structural support, and we almost did it. It was so close, but it didn't happen. If we did manage to confirm it, it could have put this 70,053 level in play. But unfortunately, as we could not do that, it's put the 66,117 and the 65,322 levels in play. And you can see how these safety nets actually capture and bounce price. Reading charts through the CTKS method is very straightforward. If you get up to a level of structural resistance and it manages to maintain positive momentum, it's heading to the next group of structural resistance levels. But if it can't maintain that, it's coming down to lower structural levels. And we can see that Bitcoin is currently down 0.38% over the past 30 days, but it's still actually following the consolidation path from the service. We know as a global family that price can move either up or it can move down or it can consolidate. So having a reasonable idea as to what the bookends on price can be from a positive and negative dimension is really important. These are called CTKS paths and they're taught in Level 2 standard certification. Right now, inside Solana, we can see it was holding the consolidation path, but because of the power in the DXY, it's coming down kind of midway between the negative path and the consolidation path. It's currently 142.89. Inside the CTKS method global family, we've got a very distinct way that we look at charts. We know all charts are intercorrelated and interconnected. Recently, inside the service, we've added in the Dow and the Russell. The Russell tends to throw a reasonably good signal on crypto. Price waves are always dictated by CTKS structure. Keep your eye on the Tier 1, Tier 2 and Tier 3 charts that tell a story of the market that's just unheard of. And if you would like to go across to CTKSMethod.org, you can pick up a free cheat sheet. And one of the things that we're seeing right now is the strength in the DXY is absolutely crushing crypto. And this is particularly interesting because the US 10-year and the US 2-year are both looking relatively healthy, but the DXY is just rampaging. And a lot of that has to do with dollar yen. There's a lot to know when it comes to financial markets. Have a great weekend ahead, my friends, and Kate and I look forward to catching up with you in the next video. Bye for now.